So, yeah, I've been looking at housing markets a little bit, and I've been looking at them in the context of interest rates. It feels to me like where I'm looking at the moment that I'm starting to see stuff coming back up on the property market that I've looked at a while ago in my search, and it went away again because it was quite a heavily contested market, and it's appearing again, which tells me it's also appearing at slightly lower prices for what it's worth as well, which tells me that there's just starting to slip off a little bit. I say that as today news emerged that house prices are up 10% despite rising interest rates, but this is an anecdote, right? So more than one makes it data, but one is simply an anecdote. It's looking to me like there might be tougher times ahead, and I'm thinking of this in my kind of stock market hat on for the moment, which makes me wonder about house builders and whether they might struggle a little bit coming forward if mortgages go down. But it does make me wonder, if we think there's a kind of recession coming, we tend to think, look, big cyclical things like houses are a really good example, but other things as well, they tend to do worse. We should expect their earnings to go down, and that sort of speaks to a stock that I talked about several months ago now, Howden Joinery, on a show with, I think, just Steve. Might have been my stock to buy in either July or something. On the face of it, that looks like it's going to have a tricky sort of time, because as people are feeling the pinch of their rising energy bills and so on, I wonder whether they're going to start pulling back on their purchase of a new kitchen. But I did hear a thought expressed on a different podcast that kind of just got me thinking about that a little bit. Higher mortgages mean people are less likely to buy houses because they're currently paying whatever it is, $12.50 a month on a mortgage. They think, well, I could get a new one, but then I'll have to pay sort of $19.50 or something like that to move up. Don't fancy doing that. Interest rates are higher. I'll stick with the one I've got. But that then tells me that, look, if you're in a position to start doing that, one thing you could try and do is just start improving the house that you have. That kind of money you were going to use buying another house, it's $450,000 or so to buy a house around here. $450,000 buys you a really good kitchen and a really good bathroom and probably an extension and a whole bunch of other stuff as well. So I do wonder whether the kind of obvious thought that I had before in terms of interest rates go up, house prices run into trouble, everyone starts pulling back in their money, nobody buys a kitchen anymore. It's perhaps a little bit too simple here, and I wonder whether somewhere like Howden's, like the home improvement bunch, might actually hold up better a little bit as people pivot off going for mortgages and going on to improving the houses that they have. So, yeah, I'm watching house prices with kind of interest as mortgage rates come up.
It's definitely true that, as we spoke about last week, there's a definite correlation between when house moving slows, house extensions grow, and which is why Forterra, I think, is a good way to play the house builders, because you get all the benefits of supplying the house builders, and when the house builders start to mothball the sites, you get the extension starting up. So that's a good reason to own a brickmaker, I guess, is what I'm saying. But yeah, there's a definite correlation between that, Stephen. I can tell you categorically, because I work with a lot of the major house builders, that they are starting to slow down. They're not moving or opening new phases. A lot of them they work in phases, so they'll work in 30 to sort of 60 house phases. A lot of those houses have already been sold, so essentially they're building what they've sold. Once that finishes, there's not, it's not as strong as it was. The smaller house builders who've maybe only got 10 houses on a site, who probably build them all and sell them, have sold 3 or 4 of them before the interest rates started rising. But now there's a lot of people thinking, well, there's only 6 more houses to build on here, so I'll wait until they're finished, because I don't want to live on a building site, and a small house builder might not finish these houses. Can you imagine? I mean, some of these houses I've been to see are selling for £800,000. Can you imagine buying an £800,000, looking right to see the idyllic finished village that is being built, looking left to see a gone bust builder half-built plot next to you? You wouldn't want that, would you? So, there's definitely a slowing in the small house builder, and when that happens to the small, you can guarantee it's going to happen to the big guys as well.
That's a really interesting point, actually, because we had a house in Spain that exactly happened. They stopped building probably a road after the road that our house was on, and it was dire. It was a night and day change from the houses that were on this road that were all nice and done up, and the houses on the next road which just were full of homeless people, boarded up, people trying to just keep squatters out all the time, and it was just a very interesting situation. Do you genuinely think that's something that could happen over here?
Definitely, and I wouldn't be surprised if it does. The issue you've got at the moment is that materials are actually coming down in price, so that would be a really good time to start building your actual finished stock. The only problem is that these small companies that produce all these materials for you, their energy bills are going up, and their actual delivery costs, the petrol costs, the labour costs are all going up. So any saving steel and iron is still going up as well. But any saving you're making on material costs is being lost in energy. At what point? I mean, it was said to me a number of occasions last year, a number of builders said to me, well, at what point does it not make sense to me to just not doing anything? Do you know what I mean? I remember, just quickly, a sort of anecdotal story. There was a guy building in Lincoln, and he's renovating an old James Bond house down there. It was used for a few poolside shots.
You are giving a lot
of
of details out. You're giving
this
a lot of personal details.
This is fine. And he basically, at the beginning of the build, he was asked to submit a fixed price for the full renovation, despite the fact that it was being massively extended. It was going to take over a year and a half to build. And he turned around to the guy and said, look, if you want me to fix the price for a year and a half, I'll just give you 20 grand now, because that's probably what I'll lose, and I won't bother starting. Because he anticipated, these prices going up. And I think it's only really going to get worse. It's just not the right environment for house building at the moment, I don't think.
Yeah, and a lot of these companies, like from an investment point of view, and I've said this on the Discord a couple of times, Persimmon has like a 10% dividend at the moment, and people keep saying to me, oh, have you seen this dividend on Persimmon right now? And I'm like, that's coming down, mate. With the cash that's coming out of them at the moment and the slowdown in the housing, that dividend is getting cut. They do sit at a lovely PE, and you can talk about inventory all the time. But I think, I won't be buying a UK house builder until the dividends start to get cut. On mortgages, though, I'm wondering if there is a collapse here somewhere starting to brew with these raising interest rates. And I think I might have said it a couple of years ago, and I think I teased it a couple of times on YouTube and in the Discord and stuff, but I've got a real worry about the Help to Buy scheme at the moment, because that is around 6 to 7 years old right now, maybe a little bit longer. But my personal Help to Buy is just coming up to 5 years. So let's say, it may be 7 years old, the Help to Buy scheme, maybe 8. And I had this wonderful plan to save up all of my Help to Buy money and pay it back to them in one go, in cash, and it was great. House prices have gone up since then, and the shared ownership of that has gone up a lot more, which is, it's almost certain that I'm going to have to buy quite a hefty mortgage with a higher interest rate now, and that's going to put a lot of strain on my earnings, my ability to invest, my ability to live. And then obviously with energy prices at the moment, it's quite bad. But what I also did probably 2 years ago was I did a little vox pop in my area. I went around when I was investing just to people's houses that have new builds. This is weird, isn't it? I actually went to people's doors and I knocked on the door and said, do you mind just telling me what your plan is for your Help to Buy? And overwhelmingly, their plan was remortgage whenever the 5 year, because if anyone knows anything about Help to Buy, you buy your house, the government keeps 25% of it, or at least some loan company keeps 25% of it, and then after 5 years you have to start repaying it. You either have to pay off the mortgage in full, or you pay a certain interest rate, and in the first year it's not so bad. It's about 90 quid-ish for that first year that you've got to start to pay, but then it doubles every year and it gets really hard. So you've really got to make the decision pretty soon, pretty early, to pay off that debt. And that you either do that by paying it off in cash, you pay it off in little installments, or you pay it off by remortgaging your house. And as it's 5 years for me right now, that means it's between 8 and 5 years for other people as well. And if me, who had a really good plan at once that's gone completely wrong, I reckon there's a lot of people out there that have not put this plan in place, and they are now about to take out a mortgage and buy their house again for more than they originally bought it. I think this is a real problem here in the UK, and I did a lot of little bits of research to see how popular this Help to Buy scheme was, and it was really, really popular. It's not really good here over the UK to admit that you don't fully own your house and you've taken out some sort of weird scheme to pay for your house, and you essentially owe money to a loan shark. I seriously believe after that Vox Pop, I did that whole thing, in the Big Short, where where they go out to the
so you went to a lap dancing club?
Yeah.
Basically, I went to a lap dancing club and asked all the strippers, have they got Help to Buy in their house? And they all looked at me like, no, give me a fiver. And but no, I did. I actually went to a few people's houses, and I've asked a lot of our friends who have also done something similar on way bigger houses and way bigger mortgages than what I've got. We were quite smart, and we tried to keep it as low as we could. But some people have bought out of their range on the to the top of their possible mortgage range on the Help to Buy, and their financial advisors have said to them, yeah, you'll earn more in the next 5 years. In 5 years your wealth will have gone up, and your income will have gone up because you will have got promoted and things like that. And that might not have happened, and energy bills have gone up. I'm worried. And I've been worried about this for 3 years now, but I know I'm getting really, really worried about it, and I do foresee some form of financial crisis happening here. And it happened in America as well. America have started doing a bit of a Help to Buy scheme. They more recently took it up. So I wonder if there's something going on here. It's all speculation at present. I need to do a lot more digging into it. But this is just my 2 cents. I think I've spoke about it a long time ago, but it's still festering there for me.
It does sound like a ticking time bomb, really, when you think about that, doesn't it? Because I think
I've just sold it to you as a ticking time bomb. There might be a completely different thing, but
it does. Yeah. Well, I mean, if it is how you say it is, it's almost a perfect storm with the rising energy bills now. Everything, people's budgets are going to go from perhaps what they thought was comfortable to becoming wildly uncomfortable. So yeah, I guess that's one to do a little bit more digging on.